Hi, everyone, and welcome to the Small Business Update. I'm Jeanette Mulvey, the Content Director of CO from the U.S. Chamber of Commerce. Thank you so much for being here today. Today, we are talking about the $900 billion relief package passed by Congress this week and what it means for small businesses. This latest stimulus package includes several changes to the Paycheck Protection Program and allows for a second draw for small businesses that have exhausted their initial PPP loan. Other updates we'll discuss today include changes in allowable expenses covered by initial PPP loans, the loan forgiveness process, and the tax treatment of those loans. A quick note that we will be taking your questions later in the session, so you can type them into the right-hand side of your screen. And if you see a question you like, please click the thumbs up button to move it higher on the list so we can ask the most popular questions first. All right. I'd like to introduce our guest, Neil Bradley, Executive Vice President and Chief Policy Officer here at the U.S. Chamber of Commerce. Hi, Neil.
Hi, Jeanette. Good to see you again.
You too. All right, let's just get right to it because I know people have tons of questions. So first of all, we've heard the law has been passed by Congress, but what does that actually mean? What happens next?
So late yesterday, the House passed it, and a little bit before midnight, the U.S. Senate concurred in that. It's on its way to President Trump's desk. As soon as he signs it, it'll become the law of the land. So we expect that literally within hours that the president will sign it, and all the provisions will become law.
Great. Okay. So let's talk about what this means to small businesses. There's a lot of changes in this law. So could you give me like the highlights, and then we'll walk through each one and you can give me the details. What are the key changes?
Sure. Well, let's start with the Paycheck Protection Program. This was one of the marquee things from the CARES Act this past spring. We spent a lot of time helping small businesses navigate it over the course of the spring and summer. This bill reopens that Paycheck Protection Program. It makes a number of changes to the allowable expenses, to the tax treatment of PPP loans, to the loan forgiveness process, to how the PPP interacts with other government programs. And importantly, it creates what's called a second draw Paycheck Protection Program for some small businesses who have exhausted their current funding. It also makes changes to the Economic Injury Disaster Loan Program, to traditional SBA loan programs, and also the Employee Retention Tax Credit, just to name a few of the provisions.
Okay, so we'll go through each one of those things, so no one should panic because Neil's going to give us all the details. So let's just start at the top, Neil. Eligible expenses under the initial PPP loan, how has that changed? Initially, it was for certain utilities and for payroll. What's different?
Yeah, so the eligible expenses that you could use previously, payroll costs, mortgage interest, rent, utilities, those remain the same. Congress has added 4 more categories of eligible expenses. They include some of your business operation expenses around, for example, cloud computing or sales monitoring, the back-end accounting mechanisms that a lot of small businesses have relied on to comply with a lot of these new government programs. It also extends to so-called supplier goods. So a lot of small businesses spend a lot of money with suppliers providing the goods that they need to operate their business. Going forward, you'll be able to count as eligible expenses what you pay to a supplier for goods that are essential for your business. There's an important caveat. The contract or purchase order has to be in effect prior to receiving the loan for the expenses to count, unless you're talking about a perishable good. So for a lot of restaurants, for example, you'll be able to continue to buy produce and be able to count those expenses. We also know that lots of small businesses have spent a lot of money retrofitting their operations because of the pandemic, implementing sneeze guards, creating outdoor spaces for customers, drive-through windows, buying personal protective equipment, for example. Now those expenses will also be allowable uses of PPP proceeds and count towards loan forgiveness. And of course, as we all recall over the course of this year, a lot of small businesses were impacted very negatively by the unrest and rioting and looting that occurred in many parts of the country. If you have expenses related to that, losses that were uninsured or weren't otherwise compensated, those now qualify as eligible expenses.
Okay,
Let me say one thing about all of those new eligible expenses. The one thing that didn't change is the 60-40 rule. Those familiar with the PPP program will remember that your loan forgiveness has a number of caps on it. And one of those caps is that at least 60% of the amount of your overall loan forgiveness has to be for payroll costs. So while you have new expenses that count towards loan forgiveness, you still have to meet that 60% threshold at the end of the day.
So those new expenses still have to be in that 40% bucket. A few questions about what you just said. When you talk about goods from suppliers, you're not talking about inventory, is that correct? You're talking about goods that you need to run your business.
You're talking about goods that you need to run your business. So, and importantly, contracts you entered into before receiving the loan. That's right.
Right, and this is for the initial PPP loan. So this is for people who already have the PPP loan. Is that correct?
So it applies to if you have an existing PPP loan today, it applies. If you go get a PPP loan, next week, it applies. If you get a second draw PPP loan, which I know we're going to talk about in a minute, it also applies. So these are permanent changes that apply to anyone who has an existing loan or will get a future loan.
Okay, good. So in terms of loan forgiveness timing, has anything changed there?
Yeah, a few things have changed. A big focus of the loan forgiveness aspect of it is your covered period, meaning the period in which all those expenses that we just talked about count towards loan forgiveness, where you have to spend the PPP money on certain things in order to get the loan forgiven. The covered period, as it's defined in the law, still begins on the date that your loan is originated. So the date that you receive the money from the bank is the date that you begin tolling for those expenses. But now the borrower gets to choose the end date, and meaning when you conclude that you've spent all of your PPP money. It simply has to be a date that is between 8 weeks and 24 weeks after you receive your loan. So if you need more time, that full 24 weeks, to maximize your loan forgiveness, you can. If it turns out you maximize your loan forgiveness over the course of, say, 9 weeks, then you can go ahead at the end of that and apply for loan forgiveness. So it gives borrowers, small business owners, a little bit more control over the process.
Got it. Let's talk about an issue that I still don't know the answer to, which is, are PPP loans taxable?
They are not. So this is a huge, really important change that Congress included in this legislation. You may recall back when Congress first passed the Paycheck Protection Program, they said that if your loan is forgiven, it doesn't count as taxable income. Well, then along came the IRS and said, okay, well, it doesn't count as taxable income, but we're not going to let you deduct the business expenses that you paid for with PPP funds, which of course is just a backdoor way of taxing your PPP loan. Congress fixed this. And so whether you already have received a loan, whether you're going to get a loan in the future, it's retroactive all the way back to the very beginning of the CARES Act. It says that PPP loans aren't taxable and that the IRS can't limit your deductions as a result of receiving a PPP loan.
So that's a very big headline.
It's a very great, very good news. We've talked to lots of small businesses over the last several weeks who they're preparing their taxes and they're getting really big surprise tax bills that they weren't expecting. Now they won't have to worry about that.
Okay, that's great news. So let's talk about this second draw. I guess under these new rules, some companies can apply for a second PPP loan. So tell us more about who can do that.
Sure. So if you've received a PPP loan and you've exhausted those funds, and if you meet certain eligibility criteria, you can apply for a second draw PPP. The two most important eligibility criteria is that you have to have fewer than 300 employees. You may remember that under the original PPP, your first loan, it's 500 employees. So this is a little bit more targeted to smaller employers. Second, you have to be able to demonstrate that you've had at least a 25% drop in gross receipts in a quarter of 2020 relative to the same quarter in 2019. So if it turns out your business is only slightly off, let's say you're 5 or 10% down each quarter over the past year, over 2020, relative to 2019, you don't qualify. But if you're one of those small businesses who was shuttered for 4 or 5 months, or who are only barely open, you've lost more than 25% of what would be your normal gross receipts, then you qualify for this second draw PPP.
What if a company applied for a PPP loan and did not get one the first time for whatever reason? Would you encourage them to try again?
I would, whether you waited too long and the window was closed, or whatever the situation. We also know that, by the way, there are some entities, some employers who were originally not eligible under the Paycheck Protection Program. 501c6 organizations, for example, housing cooperatives, and local news media outlets, whether that's a local newspaper or a radio or TV outlet. They were originally, in many cases, ineligible. That's been changed, and now those entities can go apply for a PPP loan. There's also one other important change. If you remember when we first started discussing the CARES Act back in the spring, we notified small businesses that you had to make a choice. You could choose to either receive a Paycheck Protection Program loan or claim the Employee Retention Tax Credit. But if you claim the Employee Retention Tax Credit, you couldn't get a PPP loan, and vice versa. That is now repealed. So if you happen to be one of those small businesses who took advantage of the Employee Retention Tax Credit and had foregone the PPP, you can now go apply for a PPP. Similarly, if you've received a PPP loan and therefore not taken advantage of the Employee Retention Tax Credit, you can now take advantage of the Employee Retention Tax Credit.
Okay, that's great information. On this second draw loan, is there a maximum amount one can borrow?
There is, and it's a little bit different. So the maximum now is $2 million for that second draw loan. I should also say, by the way, if you didn't receive a PPP loan before and you're going for your first loan, that new maximum is also $2 million. You may remember previously it was 10 million. Now it's been reduced to 2 million. And there's also slightly different calculations potentially for the amount of money that you can borrow under that $2 million cap. So folks will remember under the original Paycheck Protection Program, it was your average monthly payroll cost times 2.5. In other words, 2.5 months of your payroll expenses. That remains the same for most small businesses with respect to the second draw program, unless you happen to be a small business that's in the accommodation or food services industries, the so-called NAICS 72. That stands for the North American Industrial Classification System, which is the way businesses are classified by type in our system. If you're NAICS 72, then you qualify for a loan that is 3.5 times your average monthly payroll. So you're able to borrow a little bit more, even though you're still subject to that $2 million cap. That'll be really important for a small hotel or a restaurant or food shop, for example, where you might be able to get a little bit more money than you otherwise would have under the original Paycheck Protection Program.
Great. So we've talked, okay, so we're talking about changes to the original loan and now the second draw loan. Can we just stop for 1 second? Because I'm sure there's a lot of people who are now confused. What is the difference? Are there differences between those two things, except that if you've already got one, you can take a second one? Like, should we think of them as two different programs, or what do you think?
Well, you should think of them as two different programs with very, very similar sets of rules. So the biggest difference is the amount of your loan if you get a second draw PPP. So and the eligibility for getting that second draw PPP. So if you have, let's say, 400 employees, you qualified for the original Paycheck Protection Program, but you won't qualify for the second draw. If you had losses of, say, 5%, your business was off 5%, as a result of the pandemic, you qualified for the original Paycheck Protection Program, but you won't qualify for the second draw because you don't meet that 25% test. So very similar programs. If you understand the rules for one, the rules are very similar for the other. It's really just these differences in loan amounts and eligibility.
And just to confirm, even if you take a second PPP loan, that wouldn't be taxable either, correct?
That's correct. The tax changes cover you both in your original PPP and in any second draw PPP.
Okay. Wait, one more question about the second draw for the PPP. You probably already said this, but I can't remember. Do you need to prove a reduction in your business to get the second loan?
You do. You have to have in any quarter in 2020, so first quarter, second quarter, third quarter, fourth quarter, you have to demonstrate that relative to the same quarter the year prior, and there are special rules if you weren't in existence for 2019, so don't worry about that. There are some similar transition rules. You have to show that your business is off by 25% or more, a 25% reduction in gross receipts in a quarter compared to the prior year quarter in order to be able to qualify.
Right. Okay. I'm sorry. You did say that and I forgot. One other question about it. In the initial PPP loan, you needed to prove that you did not lower your full-time employee count by a certain amount to qualify for the loan. Is that the same with this one?
That's exactly right. So the reduction in employees and the reduction in wages by more than 25% continue to apply, but so do the safe harbors. And the safe harbors, you may recall, said that if by a date certain, and by the way, they've now extended that date certain to whenever the end of your covered period, meaning the end of when you're using your loan proceeds, if you've restored that headcount or you restored those salary reductions, you don't lose any of your loan forgiveness. In addition, the safe harbors remain that say that if you can't find workers, qualified workers to hire to fill those open slots, or if because of COVID health restrictions, your business remains off and you don't have enough business activity to warrant filling back those slots, you're held harmless. So the limitations, the requirements that you not reduce headcount remain, but so do the safe harbors.
Okay, got it. So I'm sure we're going to get a lot more PPP questions during the Q&A, but this is part of a bigger bill. So I want to make sure that you and I just touch on some other things in the bill besides PPP. So let's talk about the live venue provision. What does that mean?
So this is brand new. So this did not exist before. It was created as part of this new package, and it's $15 billion to provide grants, not loans, grants to live venue operators, theaters, movie houses, museums, essentially arts and entertainment, as well as talent producers. And so this is a new grant program. You do have to demonstrate a significant reduction in revenue and gross receipts as a result of the pandemic. And then you can receive a grant up to $10 million or 45% of your 2019 gross receipts for the entire year as a grant to help you pay a lot of the same costs that you would use a PPP loan for. So if you take one of these live venue, what they're called live venue grants, you can't also get a PPP loan. So this is another situation in which you have to choose. But obviously, the total dollar amount under the live grant program could be larger than your PPP loan. And you don't have to worry about going and applying for forgiveness. From day one, it is a grant. The one thing I'll note is this is dollar capped, and it's at $15 billion. So we expect there's going to be a lot of interest in this. If you happen to be one of those in the live event industry, if you will, this is something that you're going to want to get started on right away, pulling the information together to be able to apply once the government opens the application window, which we don't have a good ETA on when that's going to be yet, but I think they're going to be working pretty hard to get that set up in short order.
I'm sure there's a lot of people listening right now who are wondering if they qualify. So let me just throw a couple out at you and see if you think that they would qualify. Do you think a bar or restaurant that has live entertainment regularly, and that's a big part of their business, would fall into that category?
Unlikely, unless the bar and restaurant, the music and the food and the beverages are almost incidental to the performance. So if you're earning money by selling tickets, and that's the principal source of revenue, and the food and beverage is incidental to that, you might qualify. There are some pretty specific definitions of what constitutes a venue in this. They're really trying to target, the theaters, the music venues, museums, things like that, who obviously can't pull in a crowd during the COVID pandemic to fill seats.
One more question on that. Do you think that small businesses that serve those industries also qualify under that, or they probably already qualified under the PPP loans, I guess?
Yeah, no, they'd be more likely, unless there is a special provision for talent representatives. So if anyone listening today is a talent representative, you'll want to pay attention to that. But if you're simply a supplier, you do work for people in the live event industry, you probably are going to have to focus on the PPP program.
Okay, I'm going to move us on from that. We talked a little bit about the employee retention tax credit. So is there anything else you want to say that has changed there? And related to that, since the end of the year is coming, what do people need to do between now and the end of the year?
Okay, this is huge, and I really want people to focus on this for a minute. I mentioned earlier that under the old law, if you took a PPP loan, you couldn't also get the employee retention tax credit. That's changed. As soon as this bill becomes law, that's been overturned, and you can take advantage of the employee retention tax credit. In addition to that, from January 1st of 2021 till the end of June, the first 2 quarters of next year, they've expanded the tax credit pretty dramatically. So under the old law, the tax credit was worth 50% of qualified wages paid per employee up to $10,000 for the entire year. So, do the math. 50% of $10,000, it's a $5,000 per employee tax credit. Going forward, for the first 2 quarters of 2021, it's 70% of wages per employee for the first $10,000 per quarter. So that's $7,000 in Q1 of 2021 and $7,000 in Q2 of 2021. So that means the value of the tax credit could be $14,000 in 2021 per employee. They also changed the eligibility program and who qualifies for this. So under the old law, you had to demonstrate a reduction in gross receipts of greater than 50%. Greater than 50% reduction in gross receipts in a quarter of 2020 relative to the same quarter in 2019. So a pretty high threshold. That's now been changed. Now you only have to show a reduction in gross receipts of more than 20% in a quarter relative to the prior year quarter. So much easier for a small business to qualify. Furthermore, there was a 100 employee threshold. And how the 100 employee threshold worked is that if you had 100 and fewer employees, you could qualify for the tax credit irrespective of whether your employees were providing services, doing their normal work, or whether they were idled because of the pandemic, meaning you were paying them, but they weren't doing their normal work. If you had more than 100 employees, you could only claim the credit for employees who weren't doing their normal work, who were idle. That 100 threshold has now been moved to $500. So in short, if you have fewer than 500 employees, if in next year you experience a reduction in revenue that's greater than 20%, you are going to want to take advantage of the employee retention tax credit. Now, Jeanette, you asked a very astute question. if that's for next year, what should people be doing this year? Well, one of the provisions that's in this bill basically recognizes that a lot of small businesses may have not taken advantage of the employee retention tax credit this year, meaning 2020, because they took a PPP loan. You now have the opportunity before the end of the year to claim that employee retention tax credit. And you are able to look back into prior quarters in this year, basically Q1, Q2, and Q3, and be able to count those wages towards that $10,000 cap. So my advice to folks is, if you're talking to your accountant, if you're talking to your tax preparer, make sure you flag this for them. Ask them how to go about taking advantage of that employee retention tax credit, because even at the reduced levels, you're still talking about $5,000 per employee. And because it's a refundable credit, that means that's money that's going to be coming to you as the employer. Just one more thing to say about that, just to make sure that people are thinking the steps through. It does remain the case that you can't claim the employee retention tax credit and a PPP loan for the same wages, meaning you can't double dip. So if you use the PPP to pay your employees in June, you can't claim the employee retention tax credit for wages paid in June. But knowing that most small businesses have already exhausted their PPP, this is a great opportunity to access an additional benefit.
Okay, that's great advice. Thank you. We have a lot of questions coming in, and I'm going to take us to the Q&A in a second. I just want to ask you two more questions on my list. The EIDL loans, economic injury disaster loan, just what's the latest on that? Can you get one of those still?
You can. Well, you will be able to. This is all reopening. And importantly, the EIDL grants. You remember these were the $10,000 grants that you could receive that you didn't have to repay.
Right.
They put $20 billion more dollars into those EIDL grants. And if you have experienced more than a 30% reduction in revenue in an 8-week period, if you happen to operate in a low-income area, you get first priority for those EIDL grants. And importantly, if you're in one of those areas, and let's say you got an EIDL grant that was $2,000, so the SBA had reduced it from what you qualified for, $10,000, you can go back and apply for that $8,000. Here's another important point. It used to be that if you had both a PPP loan and an EIDL grant, they would take the amount of the EIDL grant off of your PPP loan forgiveness. They won't do that anymore. And so you'll get the full benefit of the EIDL grant up to $10,000 and the full value of your PPP loan forgiveness.
Great. Sounds like they righted a lot of wrongs with this go around.
They sure did.
Yeah.
A lot of problems we've been pushing them here at the U.S. Chamber to address, they fixed. I wish they'd have done it sooner, but as my mom used to say, better late than never.
Exactly. All right, one more from me, and then we're going to go to the audience. One of the problems, the criticisms we heard of the initial PPP loan program was that minority-owned businesses and businesses in underserved communities were having trouble getting those loans. So is there anything in this new package that addresses that?
There is, for both the PPP for the PPP program, inclusive of both first-time loans and second draw loans. What they've done is they've set aside an amount of money for those small community banks, credit unions, and CDFI type entities, which, as we learned kind of going through the summer, are really well positioned to help serve those minority-led small businesses. So in addition, they've set aside some money for the smallest of small businesses, those with 10 or fewer employees, to make sure that they get access to the PPP program. So they've taken some important steps to make sure that minority-owned businesses and smaller small businesses have access to the program.
That's great. Thank you. Okay, audience, I am coming to you now. I have a list of questions here. You can keep putting them in. Let's see, Neil, I'm going to just start at the top with what looks like the most popular. Will the application for the second draw PPP come from the bank like the first PPP program? And when should we expect banks to have those applications ready?
Yeah, so first, the SBA, the Small Business Administration, and the Treasury Department have to update the application form. They've been given instructions in this legislation to do so expeditiously. I don't think they needed instruction. They know the need that's out there, and I know they're working hard to put this together. And then banks will utilize that for that program. Earlier, you asked me about the number of changes, and because while the changes that were made were important, they haven't fundamentally restructured the program. The hope is, in fact, the belief is that they're going to be able to use the vast amounts of the loan application and the guidance that was a part of the original PPP for these second draws. And that should make it a lot easier for both the SBA, Treasury, and your lending institution to be able to get the program up and running.
Okay. I think that you answered this next question, but I'm going to ask it because I think it's confusing. So maybe you could answer it again. The earlier PPP applications used calendar year 2019 to determine the amount eligible for PPP. So, and then this person says, what period will be used for the new PPP applications?
Generally, it's going to be the same, though there is some ability. You'll essentially have a choice. You can choose let's assume you're not a seasonal employer. So for the sake of this explanation, you are not a seasonal employer. Then you can use the 12 months prior to applying for the second draw PPP, which would obviously be very inclusive of 2020, or you can elect to use 2019. So you might, assuming you had more employees and business was better, you might want to elect to use 2019 because you had more payroll costs in 2019. Conversely, if you're worried about the loan forgiveness on the back end, you want to avoid having a loan that ultimately you have to repay, maybe you'll apply for the smaller amount using 2020. If you're a seasonal employer, then you basically pick a 12-week window from February of 2019 to February of 2020 for purposes of calculating your loan amount.
Got it. This one is about the EIDL grant. If companies now get the amount of the EIDL grant returned to them, now that it's not part of the deducted from the PPP forgiveness, I guess they're asking how they get it back. How do you get the money back if you, I guess, already applied for forgiveness and the EIDL counted against you? I think that's what they're asking.
Yeah, and this is one of the unknown aspects of this. So, in the coming days, we're going to have to figure out between Treasury and the Small Business Administration how all of that works. So it's pretty straightforward if you haven't already gotten your loan forgiven. But if you have gotten your loan forgiven and you're kind of done with the original PPP, they're going to have to establish processes to resolve all of these issues.
Okay, so we don't know yet.
That's right.
If a business received PPP funding but has since permanently closed, are they eligible to apply for a second draw to cover debt obligations even though the business is closed?
Well, generally debt obligations aren't an allowable use of your PPP proceeds. And you wouldn't receive forgiveness for using the PPP proceeds for debt forgiveness. It may be possible if you were in operation, let's say in February 15th of 2020, you closed for a period and you're reopening, under as the same legal entity, that you might be able to access a second PPP. But I think based on what the questioner was asking, I'm not sure you could get a PPP loan if you have no plans of reopening and incurring those costs. You can't use it for existing debt forgiveness.
Right. Okay. This says, that you need to show a 25% loss of income in the first 3 quarters to qualify for a PPP loan. Does that include any financial help from the federal government or state during that time? So I think they're asking if you received any kind of assistance, do you count that towards your income, and therefore would that offset your 25% loss?
Yeah, this is an issue that we're looking for clarity on, as to what, if it constitutes gross receipts for those purposes. So, if the aid pushes you over that threshold, this is something that obviously we'll look to get more clarity as we dig into this, and as we see guidance coming out of the administration on that point. So I'm not prepared to say no, absolutely not yet, but I'm also not prepared to say yes, absolutely yes.
Okay. This person's asking about PPP loans under $150,000 being forgiven. I think that's a thing that it was decided they would automatically be forgiven. Is that correct?
Yeah, a lot of people refer to it as automatic forgiveness, but what the law says is that if you have a loan less than $150,000, then you have to be allowed to apply for forgiveness using a one-page form. And it's essentially very minimal information and an attestation that you complied with the requirements of the program, which will effectively operate as automatic forgiveness. I want to stress to people, if you have a loan less than 150,000, you still have to go through a process. It's just going to be a much more simplified process. One page, you fill it out. It's an attestation, and they should be able to expedite your loan forgiveness. But you still do have to request that loan forgiveness. So don't assume that it's been automatically forgiven, because that's not the case. You still have to go through a process. It's just going to be a lot easier for you.
Right. You still have to do the paperwork.
If there's one thing the government likes, it's paperwork. And, we applaud them when they get the paperwork down to a page, but it's still paperwork.
And that would apply. Do we know if that $150,000 automatic forgiveness, which we know isn't really automatic, applies to the second draw as well?
It does.
Okay.
Although the form will end up being slightly different, because you'll have to also attest to the 25% reduction, for example. But yes, effectively, yes.
Just out of curiosity, knowing what we know now, that a loan under $150,000 is automatically forgiven. Not automatically, I know, but it's easier to get forgiven. If you were applying for a second draw, is there a way you could just request a number that was less than $150,000 to make so that you knowingly would make the forgiveness process easier?
I suspect you probably could. You don't have to request and receive a full amount of the loan.
Right.
I suspect some people will potentially look to do that. Now, of course, you still have to meet the underlying requirements. For example, the fewer than 300 employees, that shouldn't be a problem at 150,000, and the reduction in revenue. So I would warn people about thinking about trying to game the system, and saying, well, they're not going to really check if it's that small of a loan. If they start seeing a lot of that, you do have to attest, and you will have to demonstrate the reduction in gross receipts. So, as they say, don't play games with the tax man.
Well, just to be clear, that really wasn't what I was suggesting.
No, I know.
But what I was thinking is, if you did the math and your numbers added up to 155,000, and you might say to yourself, you know what, I could save myself a lot of headache by applying for 149,000, and I'll just forget the rest of it. I just wondered if you could actually do that. If you could ask for
I suspect you can do that. I would work with your lender. And the example you just used, I would absolutely. It might not be worth the $6,000 of paperwork.
That was my question. Okay, so can self-employed individuals apply for a PPP for their businesses if they've been receiving PUA benefits, which
pandemic unemployment assistance? Yeah. So remember, independent contractors, the self-employed, qualified for the original PPP program. You also are eligible for the second draw PPP. You'll have to demonstrate the revenue reduction, so that continues to apply. Generally, you can't receive benefits for the same time period, but you probably will have some overlap in some differing periods where you might be able to take advantage of both a PPP and be on PUA or come off of PUA, the Pandemic Unemployment Assistance. So that's one of the things that if you are self-employed, you're going to want to take a look at. Remember, pandemic unemployment insurance was also extended in this package. It was extended through the middle of March, and in addition, they've restored a part of that additional weekly benefit. It used to be $600. You remember that $600 additional per week. That expired over the summer. From December 26th through mid-March, it'll be an extra $300 per week for those individuals who are on unemployment assistance.
Right. Okay, great. So Neil, it's almost 2:45. It's 2:41, and we were supposed to end at 2:45, but we have a lot of questions. Are you able to stay till 3?
Let's do it.
Okay, let's do it. So audience, we're going to stay till 3 so you can keep entering your questions. Neil, okay. First of all, just this person wants to say thank you to the Chamber for all of this hard work on this. So I feel like I want to share that with you. And they say they are very happy that 501c6 organizations are now eligible, but they have a lot of members who are 501c3 nonprofit members. Are they going to be eligible?
They are. 501c3s were eligible under the original Paycheck Protection Program. They remain eligible under the Reopen program and are eligible under the second draw.
Great. This is, I'm surprised, wasn't the most common question because I've heard it so many times. If we use independent contractors rather than employees, can we get the new PPP?
No, that has not changed. So independent contractors are eligible to apply themselves for the PPP, as we discussed a moment ago, but you as an employer can't claim the payments to your independent contractor, your 1099 contractors as part of your loan application.
Now, I'm almost sure I asked you this question the last time we talked about this, but if you have 1099 contractors who work for your company, we know that you can't count them as payroll, but does the money that you pay them fall under any of the other allowable expenses? Like if you know what I mean? Like are there services or anything like that?
So it's certainly the case that they wouldn't have fallen under any of the prior allowable uses. I think we're going to need further clarity, on, for example, some of the essential business services, those accounting services. If maybe some of that is kind of captured under it, I would not assume that that's the case. I don't think that that's what they were intending. I'm certain that's not what they were intending with the legislation. So I wouldn't count on that, but this will be something that we'll be looking for further guidance and clarification on, in the days ahead.
Okay. This person asks, if you didn't get a PPP loan last time because you didn't apply, will you be given preference over businesses applying for a second time?
There is some money set aside within the overall PPP program for first-time appliers. There is, off the top of my head, I want to say it's like 30 or 35 billion. I would need to double check those numbers, but something around there that is set aside for first-time PPP applicants. And so you won't necessarily get preference, but there is at least a pot of money that that is set aside for those first-time applicants.
I know you don't know the answer probably to this, but if you had to guess, we're talking about these programs like they're two different things now, right? There's the first PPP and then the second PPP, but I'm guessing that the way it's going to be handled at the bank is there's going to be a PPP application and then it's going to say, did you already get one? Like, is there language that you think people need to be using when they go to the bank to say, I want to apply for the second draw? Or do you understand what I'm saying?
I do, yeah. So you can't get a second draw unless you got a first PPP. So, if you're going in, you're talking with your lender, you're either going in as a first-time borrower, or presumably you're going back to the same lender and saying, we've exhausted the first PPP loan. I want to apply for the second. And I expect they'll have probably slightly different, well, they'll have to have some slightly different forms to capture who's eligible for that first round PPP and who's eligible for the second round PPP.
Okay. This person's question is pretty specific to their industry, but I'm gonna read it and then I'm gonna ask you a broader question. They say, is there any help for landlords that have renters that are way behind on paying their rent? We don't have payroll, just expenses. So I'm going to ask you, is there an answer specifically for people who are landlords, but also just in general? I'm sure there are a lot of businesses where they do have a lot of expenses that are not payroll. Is there any consideration for that in this package?
Yeah, with respect to the first question, there is $25 billion in housing rental assistance. So people who are behind on their housing rent. This is a brand new program. We've never had something like this before. The money is going to go through the states, but it's designed to help people who are behind on their rent. In exchange for that, the eviction moratorium was extended from the end of December through the end of January. Jeanette, you're exactly right about the other expenses that a lot of employers have. And so that aren't payroll. And again, here, this is really still around the payroll construct with respect to PPP and the employee retention tax credit. Of course, there remains other loans, the economic injury disaster loan, the traditional SBA loans, which obviously have broader uses that can be of benefit to small businesses. But the ones that have the most favorable terms at the moment are those. For folks who are, a traditional SBA 7A loan, for example, that might be something worth looking at. One of the provisions that is contained in this bill is a continuation of where the government picks up for a set period of time the monthly principal and interest payments associated with those loans. And so if you had a loan before last spring, you generally received 6 months of forbearance payments. You could qualify for an additional 3 now. If you go out and get a loan in the coming month, you can also qualify for that 6 months of forbearance. But again, those are loan programs, SBA traditional loan programs that do have more flexibility, but obviously don't have the forgiveness associated with them. Generally can have higher interest rates and other trade-offs.
Got it. We already covered this, but I think it's worth repeating. This person says they were notified by the bank that they need to consider the PPP as income and pay income tax, and they said, has this changed? So we know the answer, but why don't you repeat it for the?
It has. So if your PPP loan has been forgiven, that is not income to you. So you do not have to pay income tax on that. If you paid expenses, as you did, with your PPP loan, and you in the normal course of business would deduct those business expenses as deductible business expenses, you can continue to do that now, even though those expenses were paid for with your PPP loan. So the great way to think about this is no tax consequences from the PPP loan.
And just in defense of the bank, that's a relatively new development. It's not that the bank was wrong when they
technically it's awaiting the president's signature. So until he puts his name on it, that is still the law of the land. But it's not going to be the law of the land for much longer.
So they weren't wrong. It's just changed.
That's right.
Yeah. This person says, does the status of the first PPP loan forgiveness application impact eligibility for a second loan?
So you in order to receive a second loan, you either have to have exhausted or you will exhaust that first loan, the proceeds from the first loan, by the time you receive the second loan. So if you have a first loan application pending and you haven't received the money, it'll be a little while before you can obviously assert that you've exhausted those funds and be able to access a second draw loan. So the second draw is for borrowers who have exhausted their original loan proceeds by the time they receive the second loan.
Okay. I'm going to be really impressed if you know the answer to this question. It says, you said that money was set aside for minority and underserved businesses. Do you know how much exactly was set aside?
Well, the money was set aside generally for smaller businesses in low-income communities, and then I think it was about $25 billion that was set aside for those financial institutions, small banks, small credit unions, CDFIs that happen to serve, generally as a general matter, serve those areas. So it is not a specific set aside for a minority-owned business. It's a set aside for smaller lending institutions and then smaller employers in low-income areas.
Got it. We covered this, but I want to ask it again because I think there's some clarification to be made here. The person says, do you have to use the money within a certain amount of time, like 8 weeks or 24 weeks? So there was a change on this. So the end date now can vary. Is that correct?
That's correct. So remember, you get your loan. That money shows up in your bank account. That starts the clock ticking on your loan forgiveness period. And the expenses that you incur during that period determine your amount of loan forgiveness. So if you get a loan and you don't spend a penny of it, let's say for 30 weeks, then you're not going to qualify for loan forgiveness because you didn't do any of the qualified expenses during that period. So what is that period? The period where your expenses count towards loan forgiveness begins on the date that the loan is originated, the date that you get the money. And then it ends at some point between 8 weeks after origination, but before 24 weeks. And so you get to choose the window between 8 weeks after origination and 24 weeks after origination for the end date of that period. And so under the old law, it was a full 24 weeks. And so they've just made it simpler for people who want to say, hey, it's been 15 weeks. I've exhausted all my PPP funds. I want to apply for loan forgiveness and go through that process.
Great. One thing I want to ask you, we've had a long time now of people starting to apply for forgiveness for PPP loans they got earlier in the year. Have you seen anything like lessons learned for people who are applying for forgiveness or who are just getting loans, like mistakes that people made, just things to keep in mind that you're going to need to be thinking about later when it's time to apply for forgiveness, now that we've had the benefit of time to see it play out?
Well, I think a good best practice is always just keep track of your expenditures, right? And so, even though they're simplifying the process, particularly for those loans under $150,000, it's still the case that you have to maintain paperwork for a certain period of time. And so, just as a best business practice that we should all be doing anyway is to keep those records about what you spent the money on, so that when you get to the forgiveness period, it's just a lot easier. And should there be any questions after the fact, you're not scrambling. So I think that's probably a good best practice. I think it's always good to check in with your lender, ask your lender kind of ahead before you show up, ask them what they're looking for, what they need. It should be more standard and simplified now, but it never hurts to check in with them and just make sure you have everything in order when it comes time to fill out that application.
All right, great. We have 5 minutes, and I have a few here that I think we can do like a lightning round, okay?
All right, let's do it.
Okay, so they say, do you know how long the $300 additional unemployment will run? They heard it was March, but do you know?
I believe it's March 14th.
March 14th, okay. This person says, we always include tips on paychecks. Do you know if tips can be included as payroll when they calculate payroll? Yeah,
so a great question. And I'm searching in the back of my memory for the original PPP discussion. There's a definition of payroll costs, and I believe in certain circumstances that you can include that. So that hasn't changed. So you're gonna look back. There's a guide on the U.S. Chamber's website that actually spells out what counts as payroll costs. If you take a look at that, that'll be a quick answer to your question. I think it's worth looking at because I think the answer, as I recall, is yes.
Okay. Do you think it would hurt a business right now to change they don't say why they would do this, but to change their tax entity from sole proprietor or to LLC or LLP with regards to eligibility for these loans?
I don't know with respect to between an LLC. I don't. So you're still using the same schedule for your application. I don't know that it would make a terrible bit of difference because self-employed or LLC, unless you're having a multi-member LLC or if you have a partnership, multi-member partnership, there could be some implications there. But if you're talking about a sole member, it'll likely be the same forms. But before I made that change, that would be something I would definitely double check.
Okay. EIDL loans. This person applied in March, was denied. Do you think it's worth reapplying? And my addition to that question is, you would assume they would have, if they even had a chance, they would need to reapply. They're not going to look at applications that were denied, right? You would have to start the process over again.
Yeah, and if it's an EIDL grant and they meet the certain thresholds, they might be able to get priority for that EIDL grant, but not knowing the reasons that they were denied, yeah, I can't say for certainty if something would be different. I think, Jeanette, your point is exactly right, though. They're not going to do it for you. So if there's a possibility, you're going to have to reach out and do the application yourself.
Okay. I would also be pretty impressed if you knew the answer to this question, but it's our last one, so I'm going to give you a shot. They say, and if the PPP loan is now not taxable, do you have any idea how companies reconcile this on their books? So in other words, it's a liability now, but they need to write it off as like, how do they handle it on the books? Have you heard anybody talk about that?
Yeah, so admittedly, it's a little bit of a weird treatment, right? So when it's a loan, it's a liability on your books. When the loan is forgiven, we traditionally think of that as income. What the federal government has said is that may be income to you, but it is not income for tax purposes. So you don't have to worry about it for tax purposes, though, depending on your accounting and, what kind of company you have and who the accounting reports to. This is something I would definitely talk to my accountant about how to appropriately reflect this. The good news is that you just won't have to reflect it as income for purposes of paying taxes on it.
Right. All right. Well, thank you. Thank you so much, Neil. I think that's all we have time for today. So thank you very much for joining us. I have a feeling this is not the last conversation we'll have on this topic. But it is all we have time for today. So thank you to everyone for joining us. Now, if you need more information, the U.S. Chamber has released hot off the presses just today a guide on this new package. If you look at your screen, you should see right under the viewing window, the URL is uschamber.com/SB loans. So you can check it out there. Thank you to our audience. Thank you to Neil. Thank you to everyone. Have a great holiday, and we will see you soon. Take care, everybody.